The TARP has become a classic bait and switch ploy. Instead of being directed to help people avoid foreclosure, it's become the BARF, the Bank Asset Rescue Fund. The funds are being diverted and sponged up to bail out off-balance sheet entities, make acquisitions, and stabilize compensation. It is time for financial martial law. We should take immediate and decisive steps to avoid further damage. All U.S. money center banks should be nationalized until the market and economy stabilize. It has recently been estimated the collapse of a major financial center bank could cost over $1.5 trillion in losses, but it would only cost around $400 billion to buy out all the U.S. money center banks and brokers in the open market, a net savings of $1.1 trillion to the taxpayers. The explosive growth of credit default swap derivatives underscores this paradigm shift to widespread adoption of hedging strategies as a substitute for sensible underwriting and lending practices. Why should we let bankers continue to call the shots? Wouldn't this be throwing good money after bad? Didn't they blow it already by turning the banks into de facto hyper-leveraged hedge funds? What about Paulson? William Black, Associate Professor of Economics and Law at the University of Missouri, who was counsel to the Federal Home Loan Bank Board during the S&L crisis, says Paulson steered Goldman Sachs into subprime and Alt-A mortgage securities before becoming Treasurer Secretary in 2006. He has called for modern new regulation to deal with the markets of the 21st century. How about some recent history on the last Modernization Act, the 1999 Gramm-Leach-Bliley Act? It was Glass-Steagall, separating bankers and brokers born out of the Depression in 1930, that had successfully kept financial markets safe for over 65 years. This is the prime example Paulson cites as outdated regulation. Seeing the folly of BARF, the Bank Asset Rescue Fund, in its failure to achieve TARP's intended goal, corporate bond spreads are blowing up, and the equity markets are choking on it more. Could the nationalization of money center banks be any worse than our current predicament of death by 1,000 cuts, the result of misdirected policy that drains critical time and money away from its intended targets? There is strong historical precedent of success, both here in the U.S. and the UK. The Conrail Privatization Act in 1986 was signed into law by President Reagan. It was the largest initial public offering in U.S. history at the time, worth over $1.9 billion. And in the United Kingdom, two of their largest companies, British Petroleum and British Telecom, were also successfully privatized. The Obama Financial Dream Team can make quick calls with great acumen. They could move quickly to modify all subprime and at-risk home mortgages at 60 to 70% of face value and extend maturities out for 10 years, fixing rates at affordable 6 to 7% levels. But all will be in vain if we do not correct two glaring systemic flaws in Wall Street research and government oversight. While we were focused on making sure Wall Street equity research was clean, debt research fell into massive corruption. Should government regulators be allowed to accept campaign financing from companies and industries they regulate? Christopher Dodd, presidential campaign, 2008. Barney Frank, congressional re-election campaign, 2007-2008. And our good friend Alan Greenspan, the maestro as many called him for his financial genius. Does he look back with a grin and a chuckle or any regrets? Thanks, Al. This is Robert Maltby with Singular Research.